I know you can't see me clearly, but this is what can happen. Imagine if banks would pay you to borrow money and would charge you for keeping money with them. Okay, getting back to normal, this won't probably happen in the USA because the head of the Federal Reserve, Jerome Powell, has another opinion about the economy, and he's saying that there are other tools that can help growing the economy back. Getting paid to get a loan sounds ideal, doesn't it? And it's hard to believe that such a thing could happen, but such a moment has already come in some countries. In Japan, for example, and throughout Europe, negative interest rates are becoming a reality and are beginning to have real consequences in everyday life. Even if Powell didn't say what actions will they take and what is the Fed doing about this, he agrees that it's possible to have a rebound of the economy more chaotic than first expected. Okay, you probably already know this, but what's the most important thing here is how this could impact everyone, from companies to normal people. In the same way that negative rates may encourage you to borrow and spend money, they are also a powerful incentive not to save money. In countries with negative interest rates, we are starting to see a tendency for banks to transfer these negative rates to depositors. Pretty bad, right? Actually, I think a great percentage of the population might not be interested, or maybe they don't understand what's happening. And you should definitely know how negative interest rates can affect you and if this is a good thing or a bad thing. So obviously the winners are companies and people with large debt loans. If the interest rates will fall, the cost of borrowing money will decrease. So some companies will even get paid to borrow money, of course only if the interest rates will go below zero. Someone will also have to lose. So people with savings and companies with large cash balances won't be as happy as until now, probably. It's quite frustrating to be penalized to hold money, right? If you look at things from this point of view, it might not be a good decision. But this is the point for having negative interest rates. Companies will be forced to invest the money. So by spending money, in theory, the economy will see a growth. There are more extreme measures that the Fed could potentially take in the future, in addition to dropping interest rates below zero, and they could actually print money and distribute it to Americans. This policy is called the helicopter dropping. Okay, maybe it will never happen, but I just wanted to mention it. Now, let's see how low rates or negative interest rates can help the economy. Both consumers and companies are more likely to spend if they can borrow inexpensively. After all, the less interest we pay, the more money we have. And the more money we spend, the more the economy grows. Another thing that is very important to know is that low rates can really help the stock market, since businesses will pay less interest, they're more profitable. Also, when bank interest rates are terrible, investors will seek options with higher returns, like stocks. So, although low rates are not good news for savers, they could really get the economy moving. So, what savers should do? According to the specialist, you should consider other alternatives to the traditional savings accounts. For example, you can switch to a high-interest savings account, and the best option seems to be Citibank. You can open a savings builder account and maintain a balance of $25,000 or more, or you can choose to make at least one monthly deposit of $100 or more, and this online bank offers an annual percentage yield up to 1.75%. It's also 100% safe because it's FDIC insured. Okay, so getting back to negative interest rates, some people may say they are good and some people will say that they are bad. Oswald Gruber, for example, the ex-CEO of the largest Switzerland banks like UBS and Credit Suisse, criticized the negative interest rates, saying that they are crazy and that they would amplify the deterioration of the financial sector. And he also said that this means that money will no longer have any value. In his opinion, as long as there are negative interest rates, the financial industry will continue to decline. Another example, Hugh Van Steenis, a senior consultant of the UBS and a former advisor of Bank of England, highlighted an analogy made at a conference. Negative interest rates are somewhat like steroids. They are great for a short period of use, but long-term consumption, it begins to dissolve the bones and makes the patient weaker. We can now look at an example of Sweden. The world's oldest central bank reduced the interest rates to minus 0.10% in 2015 and then to minus 0.50% in 2016. This policy only led to the depreciation of the Swedish krona, increased import prices, and stimulated the dependent economy of exports. However, the bank was determined to give up their negative interest rates after seeing the negative side effects. For now, the Swedish central bank's policy has been up just for a few weeks, so any conclusions about its impact is kind of premature. Of course, if the institution will be forced to change direction, then the officials are still considering to get back to negative rates. There are other examples of what would mean the negative interest rates for the economy, because it's obviously not the very first time in history that this is happening. Anyway, we can decide these things, so what we have to do and what we should all do is wait and of course adapt. But because we are the first affected, we should try to have at least one option for each side, negative interest rates or not. I hope that this video was helpful and now it's more clear for you what the negative interest rates could mean. Don't forget to subscribe and turn on the notifications, because on this channel you will learn about money, investing, entrepreneurship, and I think it's enough. Have a wonderful day. Bye bye.